So today we're going to be covering California child and spousal support in family law software. I am going to now share my screen and we're going to look at the cloud version of family law software. The desktop version, which some of you may still be using, is exactly the same substantively. It just has a little bit different visual interface and some features that are only cloud-based, like File Manager. So we're only going to be looking at spousal support and child support today. So where we want to start then is entering the data, because it's all about the information which you put in the software will give you the results that you need to have. The famous saying, garbage in, garbage out. So let's start with the overall perspective. In family law software, we have it set up so you only have to enter data once. So if you have, for example, already filled out the financial disclosures, you've entered assets and debts and income and expenses, then that information will already be in your software for child support purposes. So here we have the Bank of America account and the S&P 500 index account, which was already entered in income and expense. When I go to support data and I look at the other income lines, income from other assets, income from investments, you will see that we already have that S&P 500 index entered and the income from it. We then have to say who that income is going to be assigned to. So if that is Blake's income for purposes of support, when we assign that income to him, it will change the amount of support. At the top of the page in your support data page is a running total of the child and spousal support amount based on the information that's in the program. So if I take out assigning that income to Blake, the amount of support changed. And if I go back in, sorry about that, and put it back in, the amount of support will have changed. So it gives you a running total as you go. And you only have to enter information once. Now, our support data page can be a little confusing. So let me just lay it out for you very simply. We have 4 different pages here. 3 of them are data entry pages: DISO format, FLS quick, and FLS complete. What that is it's the same kind of information. It's just what shows there will be in the DISO format, consistent with the DISO master entry page that you may be used to if you used to use DISO master, or you still do, in addition to or before you use family law software. So this is sort of a simplified data entry. It is in that format. For each of these lines, you will see an arrow on the left side that allows you to open that section to put in more detail. And so for each of these lines, you can put in more detail about other taxable income, for example. So here we have a bonus of $1,000 a month for Blake. And if I take that bonus out, it's going to change the amount of child support because we've changed the amount of income. I'm going to put it back in for the moment, and we'll talk about bonuses later on. And so you can see that here's all the other pieces of it. And for each item, you can open the section and enter the data. We also have an FLS complete page. I'm sorry, FLS quick page. The quick page is, for, as it says here at the top, it's intended for simple cases and maybe doing a consult with a client before they've retained you, to get what I call a quick and dirty calculation. It is not necessarily going to be accurate because there may be other elements of income and other pieces of information. Like, for example, maybe at the beginning, you don't know about the other children that they have, so on and so forth. But you're going to do a simple calculation for this. You're going to enter the children, the filing status for each party in the current year, their wages, if they have one wage per party. If they have more than one wage, you have to go to the complete page, and health insurance. And then for spousal support, you will enter in the county for the calculation. And if you want to click to use the calculated number, you can do that. Or if you want to enter your own number in, you can uncheck the box and put in your own number. Okay, and we'll talk more about spousal support in a moment. Those very few pieces of information will give you a quick support calculation. And for many cases, that may be all you need. A lot of people use family law software, have more complex cases. So we have the FLS complete page. And what that's going to give you is all of the pieces of the California child support calculation, anything that, and spousal support, that would be relevant to those calculations. So you're going to see a lot more sections, and each one of these sections you can open up and enter in the information. And then you will go through, and just if you enter all of those, you will get a very complete and accurate support calculation. I'm going to go through each of those in a moment. At the top of the page, we'll see that we have taxability for spousal support. And by default, we will check that the federal taxes, for federal taxes, it is non-taxable and non-deductible. Spousal support was changed, as we know, at the end of 2018. So any order after January 1 of 2019 is non-taxable, non-deductible, end of story, no options. If you have support case from before that, that you're modifying, let's say, a prior support award that was taxable and deductible, you can uncheck this box. Now, as you hopefully know, in California, you have decoupled your taxability of alimony for state tax purposes. Decoupled means that you can have a different option for state taxes than federal taxes. And in California, your spousal support remains taxable and deductible if you choose it. I guess you can always have non-taxable, non-deductible, but why would you? So this box by default is going to be unchecked. Then the next section, let's talk about children. So here you're going to put in the children. You can put in their names, or you can just say kid 1, kid 2, okay? Nobody's going to see that unless you print certain reports that would have the children's names, or if you're going to use that data, since it's the same data that will fill in the disclosure statement, you may want to actually put in the kids' names. Keep in mind that it is the exact same data that's going to be in parties and children. So if you tell me the kid's name is Kimberly, not Kim, I can change it here. And then in parties and children, when I open up the children's section, you'll see that's already changed. If I change it back to Kim, then when I go back to the support data to the children, it is changed because it is the exact same field. So if you're going to be doing the disclosure statement, then I suppose you probably should put in the kids' names. Birth date. The birth date or year for many purposes doesn't matter. If you don't put any birth date, the program assumes the child is born January 1 of the current year. If you only put in the year, it will assume January 1 of that year. If you put in the month and year, it'll assume the first day of the month of that year. For most circumstances, it doesn't matter. It would matter if you're looking at step downs in child support, and if you're looking at tax consequences because children over the age of 17 are treated differently for child tax credit purposes. So it may make a small amount of difference if they are an older child. But for the most part, you can leave that blank or put in the information that you have. The next thing is custody for guideline. Now, what we often hear, and I get people calling me a lot about this, is the parties have 50-50 parenting time. And so what do I put in there? And sometimes mistakenly, people will put neither, because neither parent has custody for guideline, right? But that is not the case. There has to be a parent. And the reason basically has to do with federal taxes, because child tax credit goes with the tax dependent exemption, but the other credits like child care credit and earned income credit and filing status, all of which can change net income, will be impacted by who the majority time parent is or custody for guideline. The IRS actually has a tiebreaker rule. If the parties say, well, we have 50-50 parenting time, then the higher earning parent becomes the custodial parent for tax purposes, which will often lead to them being phased out of tax benefits and reduces the amount of tax benefit to the family. So you very well may want to select a parent to be the majority time parent, but you can't just pick one. It has to be majority time. So you could have 183 overnights and the other parent have 182. That parent is the majority time parent. And that is how I generally deal with the 50-50 question. I will show you a tool towards the end of this presentation to look at the various options for that decision. Again, you cannot just select who's custody for guideline. They actually have to be the majority time parent. I'm going to put this back to 245 for the moment so we can look at some other options here. The next column here is tax dependent. So this is who's going to get the dependent exemption. Keeping in mind that for right now, since 2018 and until the end of 2025, the tax dependent exemption is worth zero. There is no benefit for the tax dependent exemption itself. It is worth zero. It still exists, however, and along with that tax dependent exemption goes the child tax credit. And so it still can have a financial impact on the parties. So you do want to select who's going to be the parent getting the exemption. It does not have to be the majority time parent. We can allocate the tax dependent exemption, which also allocates the child tax credit. You do want to be aware that that does phase out at higher incomes. So there is a financial benefit to looking at how that works. And I will show you towards the end of this presentation how to look at that when we look at different options. The next column is eligible age. This will automatically be calculated by the program based on the birth date that you entered. So if I change this to say instead of 2020, 2002, it will automatically know that that child is no longer eligible under your state statute for child support. I do sometimes manually check that if I have an adult dependent child who we may still be counting for child support in a negotiated case. And that can be a useful tool. But generally speaking, child support ends, as we know, 18, graduates from high school, whatever your state's rules are. So that will automatically be calculated. The next column is child of this relationship. And for that, you want to check the children of this relationship. And then if there are other children who are not of the relationship, but you want them to be counted as what are called hardship children, then you want to add them in here and assign them as custody for guideline to the parent to whom they belong. You do not have to make them the tax dependent, and you don't have to assign any parenting time, and the program will automatically figure out that hardship calculation. And here you can see for the number of children for counted for child support is 2, and then the number of hardship children calculated. I added 2 children, one for Blake and one for Taylor, and you can see the program automatically calculated the amount for each of them for that one child, for each. If I changed this to be Blake's child, it's going to automatically make 2 children for Blake. And you can tell that it's automatic because data entry fields are yellow and calculated fields are blue. So if you see the background of this field where Taylor's number of hardship children is, it is a blue background. That means it's a calculated field. And of course, we don't need the overnights for those kids. The next column would be the number of overnights. Now, by default, we're doing annual overnights, but you can calculate it any way you choose. Weekly, bi-weekly, every 4 weeks, or annual. And then if you know the number of overnights, you can put it in. If you don't know the overnights, you can do a little calculation using the little bed icon, or in the desktop version, it'll say calc. And here we have a little calculator for overnights, and it will convert to annual or whatever the time frame that you have here. So if it's weekly, you can say this is going to convert to annual. So what is the number of overnights per week? Let's say there's 1 overnight every week and 2 overnights every 2 weeks, meaning the weekends. Now we're at 28.49%, or 104 overnights with Blake and 261 with Taylor. To get back up to that 245 for Taylor that we had a few minutes ago, I could add additional overnights. So let's say that I add 26. Now we're at 130. I'm sorry, 16. My math was off there. We're at 120 for Blake and 245 for Taylor. And that's what we're going to use. So I click OK. Now for the other child, I can just enter the information in one of the fields, and then it'll automatically calculate for the other party. So I could put in either one of these and it would automatically calculate the other one. Okay. And I'm going to take out the overnights for the other kid. We don't want any overnights there for them. Oh, it's going to make me do that. All right. Well, it doesn't matter. The overnights don't matter for those kids because they're not a child of this relationship. Okay. Now, the next piece, you'll see a note here, custody exchange. You can click to import custody exchange. Custody exchange is a completely separate program owned by a completely separate company. We just connect as a matter of convenience. It is a program and one of the few that will do very, very detailed overnight calculations. So rather than our simple, how many overnights per week, sort of a regular repeating, you can actually put in custody exchange the summer schedule versus the school year schedule and the holidays and the vacations and all that stuff. And it'll work out just fine. And then you can just import that information. It works well when you don't have any overnights already entered in the program. Okay. Now, the hardship children will automatically calculate if you've added them here. If you haven't, you could, of course, always add them at this point, and the program will recalculate the number. Here I've overridden it, so it will recalculate. But if I just put in, actually, let me just delete the override, and it'll go back to the numbers that we had before. Okay, now the next thing that we have is filing status. So filing status is a status. You can't grant somebody the status. I'm actually going to change this back on the children to say that neither. Yeah, so that Blake doesn't have any overnights. Stop it. I think I have to take this kid out or it's going to keep doing that. No. Yeah, it keeps doing that. All right. We're going to, I messed that up. My apologies. But filing status, you have to be the majority time parent. It does not relate to the parenting dependent exemption, the tax dependent exemption. It is a matter of majority time parent in real life. So you can manually change these if they came out wrong based on the information, as this just did. So we're going to make Blake single. He doesn't have a kid who lives with him. And Taylor, because she has more parenting time, is going to be head of household. I'm sorry, I did that wrong. Single and head of household and single. Okay, so here's Taylor in this column, Blake in the second column. And then we do have, for very unusual circumstances, but it happens, earned income credit. You may want to put that in if they're married filing separately, but they're, in this case, we haven't put them as married filing separate. Wages and 401k contributions. This you're going to put in as either the gross wage itself. And remember that you want to use box 5 from the W-2. You do not want to use box 1 because the box 5 includes the deductions for retirement accounts and so on. It's not just taxable wages. And then you're going to put in the amounts. Now, let's say you don't know the annual amount, but you have a pay stub and you know the monthly or the biweekly amount. You can click in the field, the little calculator button will pop up, and you can put in the amount. Let's say you only know a monthly amount, then it will automatically calculate the annual amount from that. Let's say you only know a year-to-date amount. You can put in the year-to-date amount and the time frame for that year-to-date amount, and it'll automatically annualize it. So let's say year-to-date, she made $19,678 from 1/1 to, let's say that was, you were really lucky here and you got the 7/15 pay stub, which of course never happens. It'll automatically calculate the annual and again, monthly, semi-monthly, all that stuff from that amount. Okay. You may only have an hourly wage. So if that were the case, you could put in, let's say it's not even a 40-hour week, It's a 30-hour week. So for hourly wage, you want to start at the bottom with the number of hours. And then you want to put in the hourly wage. And it will automatically calculate for you what the annual amount is. And when you click OK, put that amount in your gross wages. You can also just use the shortcut here, use the hourly wage. The program is automatically going to take the minimum hourly wage for your state, for in this case, California, right? And a 40-hour week. If it's only a 30-hour week, you can change it and it will automatically calculate the amount of wages per week. Okay. And if it were self-employment income, you can check the box and you can, then the taxes will be applied as if it was self-employment income. You can also go into the green box with the 3 dots, or in the desktop version, it'll say more info or just more. And this will allow you to fine tune the information. So here you might say, I am imputing this income. And I like to put that in as the employer's name, because then in my reports, like my budget report, it will show imputed income as the employer, so that we'll know that that imputed income is coming. Okay, let me go back here. And then also you can put in a second employer. So let's say there's a second wage. She's doing this for, maybe this is 20 hours a week, and she has a second job for another 10 hours a week. And now it's going to add up both of those for her total income. And you can, again, put in the employer name. Maybe now this is McDee's. Okay. And that's her income. And then on the budget report, you will see both incomes and they'll both show up there. Okay. All right. Now we can also add other wages and other important things like IRA 401k contributions, which are going to impact the taxes, the net income of the party. So that can be added, or it can be, it may have been added when entering assets and debts. So here it's been added already, and the contributions have been added as well. All right. So here we have Taylor making minimum wage in 2 different jobs, and Blake making $12,500 a year. Realistic, right? All right. Now let's look at income from spousal and child support, bonuses, commissions, etc. This is sort of like wage-like income from other sources that's not from assets or from a regular periodic wage payment. So some of these, like bonuses, commissions, tips, and overtime, will in fact show up on a W-2, and you may want to include them in wages if you're just getting the money, the dollar amounts from a W-2. But some people prefer to break those out because those could be variable income, and allows you to play with the numbers a little better if you've broken it out. Some of these don't count for child support, like support from a previous relationship, but will count for cash flow purposes if you're looking at budgets, etc. And some of them will be non-taxable, so that you can mark that as non-taxable. And again, you can always go into more info to fine tune the information. You can also put in footnotes, and more info is going to always be context sensitive. So here, when I look at bonuses and I go to more info, it's going to ask me about this kind of information, non-wage income bonuses. And I can say, well, bonuses aren't going to start until 2024. And they're only going to be for 5 years or 6 years, 2030. Okay. And I know there's not going to be bonuses after that. And then the program is going to put them in. We're only going up 5 years here. So if I went farther out, it would show me that it goes back down to 0 after that. Okay. Now, and that won't matter for today's support in the current year, but it may matter for projections and things that you are possibly going to use the program for later. Now, it also allows you to put in new spouse's income that will impact taxes, but it won't be used for child support if it's in that row. We also have the ability to add additional lines for additional kinds of income. So we can add gifts from parents, $1,000 a month. Does that count as income? Maybe it does. And maybe it's non-taxable. So again, all of this would impact the amount of support if it's going to count. All right. And then we have income from depreciation, add back, short-term gains, operating losses. This would bring information that would come in to play when you're doing a business and you've got some add back depreciation, or there's some short-term capital gains which count as ordinary income, or there were operating losses that are carry forward losses. You can put those in. Again, it impacts support, but it impacts taxes that impact support. Okay. And income from rental properties. If you have entered rental properties in your assets and debts, they will show up here already. If you haven't, you can just add some here, and then you can go into more info. And in more info, you can mark something as rental income property. And if I say no, then I don't need any information about it. But if I say yes, then it's going to allow me to enter in all kinds of information about rental income property, including allowing for taxable income for that property. Okay. And now that's going to count in my support calculations. Right. The next section. And again, if you've already entered that in your assets and debt information, it'll automatically show here. Other passive income items. This could be your dividends, interest, tax-free income, so on and so forth. I generally prefer to enter the asset and enter the income, which belongs to that asset, like that index fund that I showed you earlier, where there was $9,000 of income, and assign it to one of the parties. That way, if I change who gets the asset, the income will automatically go with it, and the support will automatically change. If I don't, then I have to remember to go back in here and change that item, because it'll still be sitting there and perhaps skew your results. I thank you for putting questions in the Q&A. I will tell you that the information is in the Q&A. We'll try and get to those if I can. And if I can't, we can answer them after the webinar. Lori asked a good question. I've been subtracting depreciation from rental expenses, but should I do it this way? You know what? You could do it either way. Either way works. Exactly the same on the result. It depends where you want the information to show on your calculations. Okay, the next is deductions for child support purposes. This, of course, is state specific. what's permitted. So here we have child support on a previous relationship. Blake's paying $500 a month. If there's spousal support on a prior relationship, you would be able to show that here. And then, of course, health insurance, dental, vision, union dues, mandatory retirement, which is what your state considers mandatory, not necessarily what the litigant considers mandatory. And anytime you have a question about something, we have these little help notes. And if you question it, it'll tell you that these are in lieu of FICA, which often is not paid by state employees, and they pay into their retirement. Okay. And then we have extraordinary health expenses can be a deduction, uninsured catastrophic losses, fires, floods, earthquakes, all those other things that you guys have there in California, heat stroke, job-related expenses allowed by the court. You would put that in. Again, we give you the hint that that is an annual amount. And then we have itemized deductions. So you can see that this is a lot more detailed than you would typically put in to DissoMaster. It's accumulating all of this information. Obviously, there are many, many times when you don't need this level of detail, but when you do, it's really good to have it. Itemized deductions for taxes, that would be your property taxes, homeowners insurance, and of course, the property taxes in the program will automatically be limited in the current iteration of the tax code until the end of 2025 to $10,000 a year. How many people listening to this would love to have only $12,000 of real estate taxes a year? I understand California could often be a little bit higher than that. All right. And then the next item is additions to child support. So these are the things that in your statute you can do as add-ons: childcare, special needs, travel for visitation, uninsured medical, dental, optical, medication expenses. And we can allocate those expenses automatically, either 50-50 or proportional to net income, or you can just manually enter them in whatever split the parties have agreed to, or you want to suggest to the court. Okay. And then the next thing is deviations. Deviations from child support would typically be related to the sale of the family residence. In California, that is probably fairly rare, but we have the detail on that if you need it. And then, of course, spousal support becomes a factor in the child support calculation as well, and for the child support calculation. So the first thing at number 1 here is, should we use the calculated support amount? Think of that as 2 separate questions. Number 1, is it a maintenance case at all, an alimony spousal support case at all? If it's not, then you're going to uncheck this. The program could still calculate maintenance in the background, but it's not going to use it. It's not going to use that amount. The second way that we can use this checkbox, this section, is we want spousal support, but we don't want the calculated amount. So here, the calculated amount in Santa Clara, whatever it is, I don't want to use that amount. I'm going to use a different amount. I can uncheck this box. So for example, the calculation here is for temporary pendente lite spousal support, which technically you're not supposed to use for permanent support. So when you get to permanent support, you would uncheck this box go down to spousal support to use, the last section, and you will be able to enter the information that you want. It will be a yellow field if you haven't checked the box. If you check the box, it turns blue. If you uncheck it, it's yellow, and you can use whatever number you want or you've agreed to. So that's the spousal support section. And you can see that we automatically have the formula for each of the counties and what it's going to be automatic. Now, this number 5 is inherited from DISO and from the days when maintenance was spousal support, alimony was deductible. And so currently, since it's not deductible, you're not going to be making any adjustments. So this isn't going to matter. Okay. And we do have an audit trail for net disposable income. If you'd like, we can show that when you get to that point. Okay. So now the next section is child and spousal report details. This is going to give you the results. And sometimes this is easier to read than the support print guideline pages, because this gives you a nice small table that you can copy and paste, or you can print. So if you want the detailed audit trail, now down here is where you're going to get to see it. We will talk about the bonus report momentarily. And then we have child support to use and spousal support to use. So for both child and spousal support, we can use the calculated amount. I can use the family law software calculation, or if you have a mediated, collaborative, or settled case that you don't want to use the calculated amount, you're deviating for some reason, you can uncheck this. The program's still going to calculate it, but it's not going to use it. So you can put in whatever other amount you want. Okay. And then, and it's automatically going to calculate the end month and year based on the children's birth dates. And then we have step downs. So we will automatically calculate step downs. If you want to see them, you can click on item B here, and it will give you the report of all the step downs based on the ages of the children as they emancipate. You can actually modify. So let's say this initial level was supposed to end in April of 2037, but we'll assume that the child will still be in high school at that point. So maybe it would be May or June. We can make it go another month, and then it'll automatically change when that step down occurs. I'm going to take that back to the calculated amount. Okay, now, and then if there were child support as prior relationships, you'll see that here. Spousal support to use, same idea. If you check the box, we've already talked about that, it will use the spousal support calculated amount. If you uncheck the box at number 2, it will not put any amount in, and you can manually enter an amount of support. Okay, now, let's talk for a moment about the guideline page, and then we'll go back to the bonus report. So the guideline page allows us to see either a DISO view, which replicates the DISO master page with the results in the center of the page, which I always thought was pretty weird and difficult for clients to understand. And this just replicates the DISO page, and you can look at it on a weekly, monthly, or annual basis. And we have what is titled up here, worksheet. Think of that as the FLS, or Family Law Software worksheet. What this does is, rather than DISO, which has the two sides and the results in the middle, this is more linear. It's going to walk you through the calculation. There are portions of this which are not shown on the DISO at all, portions of the calculation, but it allows you to really walk through it and see how the calculation came to be, how the result came to be. And therefore, you can have more confidence in the results. And sometimes it's also easier to then compare your results to the DISO results. If you're getting a different result than your opposing counsel, let's say, this is in fact where you can find those differences often very easily. The other thing is, family law software is certified by the Judicial Council, and it is able to be used in every court, even though some judges might tell you no, you absolutely can. And this certification PDF will pop up the PDF that is the letter of certification from the Judicial Council that says we are approved. Sorry, all the stuff you don't need to see. So this says that it is in fact approved. Okay, so if you need to ever find that, it is already built into the software. Okay, now let's talk about the bonus report, and then we will talk about some options for looking at different, in fact, this is part of looking at different options for child and spousal support. So here we have the bonus report. You can do a bonus report for each party, or a two-way interactive bonus report. Put in I don't know, IBM bonus, and put in that this is for Blake. And now the annual amount is, let's say it's $100,000. And now it's automatically going to calculate the bonus based on that. And let's say that Taylor, in this case, also has a bonus. I don't know, maybe McDee's gives out bonuses. And the bonus is $500. This is Taylor's bonus, and the annual amount is $500. And so now it's going to give you a calculation for the two-way of the bonus report. There are other options for looking at, there are other ways of looking at options for support and for spousal and child support. First, let's go to the analysis section, and we're going to open that section and go to what if. And under what if, you will see the support what if page. This allows you to put in different scenarios, changing variables from scenario to scenario. The first column is always the actual. This is going to reflect the income that you've entered in the program so far. Then I can add a scenario, and let's just say I'm going to change the overnights. Okay, so I'm going to give Taylor 183 overnights for both children. And now I am able to see the difference in the support amount. And this is on an annual basis right now. So that is going to change the amount. Maybe I don't want to change the, so let's change the label. This is 183, 182 overnights. Okay. Now I'm going to do another scenario that's going to be based on the actual, but I'm going to only change dependent allotments, 1 and 1. Okay. And it's everything that's on the first one, but I'm going to change who gets the tax exemption. Let me change this one to Taylor so we can see the difference. And now I can see that just that change of tax exemption for the one child, changed child support. Now, maybe I want to print this page at some point, but I want to reverse these scenarios. I can swap and reverse the scenarios. So I'm going to change scenario 1 and flip it with scenario 2. So now the change in the dependent exemption is the first one, and then the change in the overnights is the second one. So let's say now I want to change the actual to reflect one of these scenarios. Let's say scenario 2. I can swap the actual for scenario 2, and it will allow me then to not have to make those changes again, especially if I made more than one change. I'd only have to remember what I changed and make sure I changed it all. Boom, it's there. This is now the actual. This is now what's going to show up on your guideline worksheet. Okay. The next option is looking at alimony alternatives. And this is important for spousal maintenance. So we can start out with, let's look at a spousal support break even. What is it going to take to break even? Oh, well, she's got enough other money, so she doesn't need to break even. She doesn't need any alimony to break even. But geez, she's ending up with $438 after taxes and expenses. And Blake is ending up with $4,000 a month after, annual, after taxes and expenses. No, I'm sorry, this is monthly. And this then will tell us what will go into the program. It's not a break-even number, but I want to look at a couple of other options. So I can go meet recipient need. I'd say, what does the recipient need to of after-tax income, and how much maintenance will be needed to get there? So I can just put in the amount of after-tax income, and maybe let's make that 60,000. And I can automatically then get the amount of alimony that would be needed to get to that point. I can see a short detail that will give me the numbers, and I can see a more expanded report that gives me more detail. And I also can set options. So do I want to include living expenses? Do I want to keep child support in sync with spousal support? Because of course, as spousal support changes, child support would normally change. And you can look at all of these options and look at side-by-side scenarios. If this helps you come up with the right number, then you can take that number and put it in at the bottom of the page in the actual spousal support, or you can go back to the enter data page that we looked at before, where you would enter the spousal support number. You can also look at balancing the incomes. So let's say you want to have a 50-50 split, then we only need 21. Now, what is this 50-50 split? This is going to be a split of after-tax income. And again, as you change the amount of percentages, and you can do other columns side by side and see what the amount would be to make the parties have the amount of alimony that are needed to reach that target. And again, expanded report, short detail, expanded report, options, and a link to the actual support. You can also go to the other what if page, and here, this is great for negotiated cases where you don't care about guidelines for either support or alimony, or where you're going to keep support constant or alimony constant and look at changing the other. You can look at alimony and child support. I say alimony because spousal support and child support is too many words for my brain. And this, again, allows you options to figure out what you want to ask about, what if about, and also the options to keep child support in sync or not. do you want to do all of those changes? Okay. And then the last part that I'm going to show you in this is the reports. And we have, as I showed you before, the budget report. You can also look at the view edit taxes report to make sure that you've got all the income in the right columns. This will give you a summary of the taxes, of the deductions, the income, the adjustments to income, the itemized deductions, if they're going to use itemized deductions or if they're going to use the standard deduction, because of course, we're limited currently in terms of deductions. And then our credits, the taxes and our tax credits, the non-refundable and the refundable credits. It'll give you the marginal tax rate and the average tax rate. These are very handy reports to look at. The budget report we talked about. The other one that you might find helpful is if you go into more reports and either the lawyer's page or the planner's page. And on the planner's page, it's report number 20. The budget report for children will summarize all of the children's expenses. So if you're negotiating a children's checkbook kind of settlement where they're not going to pay child support, but they're just going to pay for the kids' expenses in some way, or you want to compare the children's expenses to the support amount for non-guideline cases, above guideline cases, then you could very easily look at this expenses for children. Obviously, in this sample file, I don't have a lot of kids' expenses entered in here. So but you will in your file. Okay, so that is our program on child support and spousal support. I know that was a lot of detail. I hope it was helpful. This webinar was recorded and we will be putting it on our YouTube channel for later view. Thank you very much.